I'm the CEO of an AI software development company, and we've partnered with the leading CPA firm nationally for the Tangible Property Regulations. The table that you see shows the tax deductions we secured for 5 clients using the Tangible Property Regulations, and these can be combined with cost segregation to create extraordinary value. We consider the TPRs to be the most underutilized real estate tax solution. Our mission as software developers is to empower CPAs by providing them AI software that simplifies the process of securing tax benefits for both their real estate and business clients. The best 3 property types for TPR are buildings valued over $10 million that have been owned for at least 5 years, buildings that have been sold or were recently part of a 1031 exchange where a significant portion of the investment was capital expenditure, CapEx, value-add buildings undergoing major renovations. Our CPA team has authored over 1,500 pages for the publisher CCH, secured $750 million in TPR income tax deductions, and given hundreds of CPA seminars for CPE on the subject of TPR. On the home page and the TPR page of our website are a number of educational resources, both podcasts and PDFs, and that's explained in the next slide. You're looking at a picture of the cover of our free Tangible Property Regulation ebook designed for CFO, CPAs, and commercial real estate owners. Our due diligence team, composed of former IRS tax attorneys and CPA auditors, each with at least 10 years of experience working for the IRS, is available for consultations on our free estimate of TPR tax benefits. They will also provide tax opinion letters upon request. However, be aware that these former IRS tax attorneys may find the request for a tax opinion letter amusing, because the Tangible Property Regulations are what's known as black letter law and have been clearly defined in tax law since 2014. You can verify this by downloading either the 265-page IRS TPR Auditor's Guide, and you can also go into our free 54-page ebook, and it has an FAQ at the end that answers the 42 most frequently asked questions the IRS receives about TPRs. And the answers are provided by the IRS. We have 4 podcasts. Most listeners begin with the 6-minute one before moving on to a more detailed version. All 4 podcasts, including both speakers and all questions and answers, were generated entirely by artificial intelligence, AI, in under 1 minute. All we did was simply submit our 54-page TPR ebook, and it did everything else, the AI. You will be amazed at how lifelike the 2 speakers are. All images in our TPR book are also 100% AI generated. For real estate owners, our 2 most popular PDFs are the 2-page summary of tax savings and penalties for non-compliance in TPR, as well as our 4-page study guide. The TPRs were enacted in 2014 and clarify what can be expensed versus capitalized and depreciated. It allows you to optimize write-offs of building improvement expenses, thus reducing NOI and income tax. TPRs enable property owners to save millions of dollars in income tax by increasing write-offs permanently, lowering the basis of the property, and reducing depreciation recapture tax at the time of sale. As in all IRS codes, compliance is vitally important and not optional. The IRS requires annual TPR reviews of depreciation schedules to eliminate improperly capitalized items. Penalties for not complying with this requirement can lead to rejection of depreciation claims, significant financial losses, penalties and interest charges, and audits. Mandatory compliance since 2014 is annual scrubbing of depreciation schedules. Want proof? Download the 265-page IRS TPR guide for IRS auditors from our website or our PDFs. Can you do a TPR and a cost segregation study on the same property? Often, yes, and it's advisable. The question is which one comes first. So TPR is mandatory annually, scrubbing depreciation schedules. Cost seg is optional. TPR studies usually come before a cost segregation study. And if you have not done a cost seg study, otherwise 5 years after buying a property is when you would do TPR. A look-back TPR on a property that already had cost segregation, many of the previously capitalized items, which are going to be depreciated, can be reclassified using TPR as permanent expenses, which is better than depreciation. Cleaning up or scrubbing a depreciation schedule can save millions of dollars in taxes. Generally, about 80% of CapEx can be expensed through TPR. We'd like an opportunity to demonstrate the kind of tax refunds we can find for you. To receive a no-cost, no-obligation TPR analysis from our experts, it's very, very simple. Step 1, email us a depreciation schedule for a building you have owned for at least 5 years, valued at $10 million or more. No tax returns are needed. Step 2, we will analyze that depreciation schedule to reclassify expenses and find the tax refund you should have received using TPR at an expert level. This can be retroactively added to your bottom line. Step 3, we will fill out IRS Form 3115 to explain the changes in your accounting so you can file for the tax return our look-back analysis will validate. Thanks for watching. This is the final slide. We have hundreds of references and audit protection is offered.